and gentlemen, good evening everyone present here. This is your host, one more time, Shweta Marvel, wishing you all a very warm good evening. This is the third day of 21st World Congress of Accountants, and very few sessions are left, building trust, enabling sustainability. And now the session that we are going to start is all about enhancing trust and confidence in sustainability information, in which we would be discussing about the road ahead for enhancing trust in sustainability information through high-quality assurance and the global standard-setting activities of the IAASB, that is, International Auditing and Assurance Standards Board. So let's get started with our session to this evening. The first eminent personality that I would like to call on stage is the IAASB board member, Mr. Chun Wee Chiew. So everyone put your hands together for him. Come on, let's call him on the stage with a big round of applause. To address the theme, I would like to take the opportunity to call on stage Mr. Tom Seidenstein, Chair, International Auditing and Assurance Standard Board, that is IAASB. So one more time, put your hands together for him. The people who would be joining in the panel are Mr. Naweed Madon, Director, Sustainability, Policy and Regulatory Affairs, IFAC. Next, I would like to take the opportunity to call on stage Mr. Wallace D. Gregory, Junior Global Regulatory Independence and Conflicts Leader, Deloitte. There is one lady joining us, Miss Hilary Eastman, Head of Global Investor Engagement, PwC UK. One more panel member who would be joining us virtually on the screen, that is Director, Audit and Infrastructure, Supervision, Dubai Financial Services Authority, that is Mr. Naweed Lalani. We can see him on the screen. Thank you everyone for joining us on the stage. Now I would like to call Mr. Tom Seidenstein to give his opening remarks and address the theme.
Do I go there? Thank you. Good evening. As I said, as I was introduced, I'm the chair of the International Auditing and Assurance Standards Board, or the IAASB. It truly is an honor to be up here again in Mumbai at this 2022 World Congress of Accountants, and to have an opportunity to speak to you on behalf of our board. We have a collective interest in the development of high-quality, globally consistent assurance of sustainability information. And in my brief remarks this afternoon, I will share what we at the IAASB are doing to achieve that goal. And I'll ask you what you as a profession could do to assist us in this vital effort. Our host, the Institute of Chartered Accountants of India, is an example of the critical role that all professional accountancy organizations play in jurisdictions around the world. The professional accountancy profession is at the center of commercial and public sector economic activity globally. You contribute to the effective functioning and transparency of markets, which is foundational to the efficient and sustainable allocation of resources. And we applaud you for your continued support of high quality, globally accepted, financial reporting, audit, and assurance standards. At the IAASB, we understand that we cannot take your support for granted. We must continually earn it by responding to the most pressing challenges facing the audit and assurance profession. The desire for high-quality, consistent reporting on sustainability factors is one such challenge. Both investors and policymakers increasingly demand an understanding of the impact of sustainability factors on company performance and the company's impact on environment and society. Initiatives here in India are leading the way, as well as those that are happening in Europe, the United States, and elsewhere. My personal view is that we're past the point of no return. Sustainability information will be part of the required external reporting environment. It isn't a question of when, it isn't a question of if, but when. Already, every public company board and audit committee should have sustainability assurance on their agenda. I believe that the accountancy profession is uniquely and best positioned to help us transform our standards and sustainability reporting requirements into what the market expects. Yesterday, I participated in a discussion with the leadership of 3 other standard-setting boards: IAASB, the IAASB, and IFAC. Together, we are committed to delivering an ecosystem for high-quality sustainability information that is decision useful as financial reporting is around the world. Internationally, the IFRS Foundation, where I began my life in standard setting nearly 2 decades ago, established the IAASB to help a global baseline on this reporting side. We at the IAASB have a similar objective. As with financial reporting, we believe that market participants are best served when the information that companies report benefits from external assurance, provided by those professionals committed to the public interest and highest ethical standards. We are therefore, like the ISSB, trying to establish a global baseline, but this time on sustainability insurance engagements. While acknowledging that different jurisdictions are on different timelines, I also believe that we should do all we can at the very outset of demand for sustainability reporting to avoid regulatory fragmentation. It took us a long time to agree global standards on the financial reporting side. We should take the opportunity today to ensure that we have a global standard on the assurance side. In a few minutes, David Madon from IFAC will present findings from IFAC's state of play in both reporting and assurance of sustainability information. It will put our panel discussion into perspective. Current sustainability reporting practice is not at the end game. It does not achieve the quality of information investors and stakeholders ultimately want. We must get to a level of quality and consistency for assurance that is similar to financial audits, so that we deliver the trust and confidence in what companies report. Much work is needed to bring ESG to the same high level that we would expect from financial audits. For this reason, the IAASB is devoting great energy to creating standards to govern assurance of sustainability information. We have a well-established umbrella, ISE 3000. We have subject matter specific standards such as ISE 3410, which deals with greenhouse gas statements. And we published guidance in 2021 to help assurance professionals apply our umbrella standard to sustainability and other non-financial assurance engagements. But this is not enough. It's a solid foundation, but we must go further, and go further quickly. 2 months ago, we approved a project proposal for an enhanced and dedicated overarching standard for sustainability assurance. This new standard, ISA 5000, will provide much greater specificity to enable both limited and reasonable assurance on ISSB disclosures, as well as disclosures from other frameworks like GRI or those being developed in Europe. Sustainability reporting standards in our proposed assurance standard may eventually apply to unlisted companies as well. We see our international assurance standards as enablers to provide timely, efficient, high-quality assurance for both large and small as they seek to access different avenues of capital and business growth. Now, as I said, we're moving quickly. We should have a new proposal for our new standalone standard next year. This is in time to take into account the timelines in Europe, North America, Asia, and elsewhere. We expect to finalize our standard in 2024. But this will not be the end game. We know that over time we will need to develop a fuller suite of standards that more resembles the ISAs that has emerged on the financial audit side. The timetables are tight, but appropriately reflect the urgency for global baseline solutions. We need, as I said yesterday, to be willing to make incremental progress over time and accept a philosophy that perfect cannot be the enemy of the good. At the same time, we must remain committed to quality outcomes as a standard setter. We need the profession, including all of you attending at this Congress, to be involved and collaborate with our work. Yesterday, we heard remarks from the Secretary General of IOSCO that made clear the need for cooperation and collaboration. This is all in the public interest. I look forward to joining my colleagues here on stage shortly to share and discuss our perspectives from the ideas from investors, regulators, and audit practitioners who, much like us as standard setters, are critical participants in the global ecosystem. Once the standards are in place, we also expect you, the profession, to live up to the highest standards of professionalism and ethics. Our standard can only go so far. We need all sustainability standards and frameworks to be conscious of delivering assurable information and suitable criteria necessary to support high-quality assurance standard engagements. This is a role for the reporting side. We heard that from the IAASB. We need regulators around the world to enforce a level playing field. And as IAASB noted yesterday, Gabriella, we need this to be done at the highest level of ethics. Demand for our enhanced requirements are high. It is why we are positioning our board to act in a coordinated, responsive, and urgent manner. I now call on you to support our work, participate, and make sure we get it right. Now I turn to David Madon from IFAC to come to the podium and provide a short overview of IFAC's recently updated benchmarking research. David?
If we can please bring the slides up. Thank you, Tom, and good evening, everyone. I, too, am honored to be here in Mumbai at the World Congress of Accountants to talk about the important role that professional accountants have and must play in enabling the sustainable transition. An important aspect of this is to bring trust and confidence to the sustainability information that companies report, and we do this through high-quality assurance. Over the next few minutes, I will present some key findings on the current state of play in both reporting and assurance of sustainability information, and then turn to Chun Wee as a member of the IAASB to lead our panel of distinguished experts. Over the past 2 years, IFAC and AICPA-SEMA have worked together to conduct benchmarking research on sustainability disclosure around the world. Our first report was published in June of 2021. My remarks today focus on an updated report that we published a few months ago, and they're based on information from the 2020 reporting cycle. I'll also share a few numbers, a bit of a sneak preview into what 2021 disclosures look like, and we'll be publishing that information in the early part of 2023. In our research, we examined 1,400 companies in the G20 countries, plus Singapore and Hong Kong SAR. We find a lot of ESG reporting. Around 90% of companies are reporting some sustainability information. However, the incidence of assurance of this information is lagging. Only 58% of companies obtained assurance over some of the information that they reported, but that is an increase from 51% the prior year. Most assurance, over 80%, is limited, not reasonable in nature. Audit firms conducted the majority of ESG assurance engagements, just over 60%, but that means 40% of engagements are being done outside of our profession. When accounting firms are engaged, they are overwhelmingly using the assurance standards of the IAASB. It's important to remember that high-quality, consistently applied standards and frameworks for how information is reported provides the best foundation for high-quality and consistent assurance. But most ESG reporting is still voluntary, and in 2020, 80% of companies used a mix of standards and frameworks for their reporting. So the IAASB's mission to develop a global baseline of investor-focused sustainability disclosures to be used around the world is not only important in terms of harmonizing reporting, it will also better support high-quality assurance and consistent engagements. Another important element about reporting is the alignment between financial and sustainability-related information. Investors and stakeholders want a holistic, timely view of a company. Where and when information is reported does matters. With respect to where, the data we have suggests that ESG information may be moving from standalone corporate sustainability reports, or CSRs, into annual reports and integrated reports. We saw a 6% drop from 2019 to 2020 in the use of CSRs. This is also important in terms of when information is reported and assured. There can be meaningful gaps in time between the issuance of an audit opinion versus the assurance report on ESG. For example, there's a 9-day gap on average in the EU, where ESG information is primarily in annual reports. But it's more like 100 days in the US and Canada, where CSRs dominate. In 2020, we also observed a doubling in the reference or use of the TCFD framework and SASB standards, but GRI and the SDGs are most frequently used. We need to keep in mind that the GRI standards and the SDGs address societal impact-focused information, which complements but does not replace the IAASB's investor-focused disclosures. Now, focusing more on assurance. I've already noted an increase from 51% to 58%, with the biggest increases in 2020 taking place in Australia, Brazil, Italy, and the UK. Of the 833 assurance reports we reviewed, 61% resulted from engagements conducted by audit firms. But there are big differences here between jurisdictions. For example, in France, audit firms have close to 100% market share. But in 2019 and 2020, South Korea had the second highest level of assurance, second only to France, but the market there is dominated by other service providers or consultants. There were 6 jurisdictions in 2020 where the majority of assurance was conducted by consultants. South Korea, as I mentioned, as well as the US, UK, Hong Kong SAR, India, and Indonesia. While the IAASB's standard, ISAE 3000 Revised, is a dominant standard, it's used 72% of the time globally, we saw a slight increase in the number of engagements conducted by consultants, and that resulted in more references to non-IAASB standards. So this manifests itself in different levels of assurance being provided. When firms do assurance using ISAE 3000, 97% of those engagements result in limited opinions. When consultants are engaged, 59% of engagements result in limited opinions, 23% are moderate, and 18% are reasonable. Last year, we conducted extensive engagement around the world to try to better understand these jurisdictional differences, and we published IFAC's vision for high-quality assurance of sustainability information. This policy statement is based on the emerging best practices that we observed in the market, and it's predicated on high-quality global standards. I would encourage everyone here after the conference to review our one-page vision recommendation on IFAC's website. So I'd like to conclude with a quick preview of new research on 2021 reporting and assurance. We now have a 3-year trend. Reporting on sustainability remains at high levels, 93%. Assurance is on the rise, from roughly half of companies obtaining assurance in 2019 to well over 60% in 2021. That's good news. Our profession does the majority of engagements, but the 3-year trend with a noticeable decline in 2021 highlights there is strong competition. The use of consultants continues to be jurisdictionally concentrated, and almost half of what consultants assure is limited to greenhouse gas or other environmental factors, not a broad scope of ESG disclosure. Finally, professional accountants continue to rely on the standards of the IAASB, but there are competing frameworks, especially when consultants are involved. As regulators move towards mandatory assurance requirements, the IAASB's work on a new, sustainability specific standard, ISSA 5000, will be critical to preventing regulatory fragmentation and delivering the trust and confidence that we all want in sustainability information. I'd like to conclude on that point and ask Chun Wee to now lead our panel. Thank you for your attention.
Thank you very much, David. And hello, everyone. A very good afternoon to all of you. I hope you're still keeping your energy level up. I hope you're still keeping well. So we are now past the midpoint of the World Congress of Accountants. Can I just say, what an impressively put together conference so far. How wonderful. Congratulations. And I know I speak on behalf of everyone who has traveled into Mumbai, near or far, that ICAI has been such a brilliant host. Thank you so much for having us, and thank you so much for welcoming us to the dynamic city of Mumbai. Thank you very much. So, what an awesome privilege to be on this WCOA stage with my 5 very esteemed panelists. It was meant to be 4, so we didn't want to let David go. So he's here to make sure that we are speaking the right thing, right? So David is joining us for the panel. And I'm sure everyone in the audience, like me, enjoyed the panel yesterday, the one that Tom referred to and Tom was on, where David Isherwood, the chair of the Forum of Firms, actually moderated a powerhouse panel comprising of the 3 chairs of the SSB. And of course, we had Sue Lloyd, the deputy chair of IAASB, sharing with us all the great work that the board has been doing so far. And then we rounded off with some really encouraging words from the IOSCO. So that was really fantastic. If anything, I think it has clearly demonstrated that the different parts of the ecosystem are really coming together enthusiastically and collaboratively. And there's clear interconnectivity, as Sue Lloyd has mentioned in her closing remarks. Now today we have on stage representatives from the ecosystem as well, albeit a slightly different take on ecosystem. So we have Tom still representing the standard setter, And then we have David from IFAC, whom you're all familiar with. And on top of that, we have Hilary Eastman, who is, with her close interaction with the investing community around the world, is sharing with us the all-important investors' view. And we have Gregory, the practitioner, on the stage. So he'll be telling us what's really happening on the ground today. And not forgetting, we have hovering over us on the big screen right up there, joining us virtually from Dubai and representing the regulator's view, Naweed Lalani. So thank you so much for joining us virtually as well. Now we're going to build on the conversation that we had yesterday. Okay, we may get endorsement, we may get reinforcement of some of the key messages that Tom has also mentioned. It's also entirely possible that we are going to get some of those views respectfully rejected or debated or challenged by our panelists. So let's see what happened today. So let's get started. Trust and confidence, as Tom has reiterated in his speech as well. Now, this is something which we have all taken for granted, obviously, for financial reporting, but quite clearly for sustainability reporting perspective, there is still some way to go. So Hilary, I'm going to start with you, if that's okay. Now, the demand for that trust and confidence come from many places, including, of course, the consumer of the information and especially the investors. Now, Hilary, what would you say is, in your interaction with the investors, the biggest concerns that you have heard, or the biggest frustrations that you have heard the investors are experiencing with sustainability assurance today?
Yeah, I think this panel is supposed to only be an hour, is that right? So I have the privilege of talking to investors and analysts and the users of corporate reporting pretty much every day. And I hear a lot of things that they like and things that they don't like. And I think that one of the things that they really are looking for from reporting, I wanted to start with the positive, is they want comparability. They're trying to make capital allocation decisions. They can only allocate between different companies if they can compare between the two and know which one's a good investment and which one's a bad investment. What do they want to be in or what do they want to be out? To do that, they need to also have transparency. So they need to have information about what companies are doing, how they're performing. They need to know to some level of detail what's really happening within the business. And they're sitting on the outside, so they really rely on companies to tell that story to them. And they need consistency because they're trying to understand what is happening over time in terms of their performance. They want to know how the KPIs are measured, just like we know with accounting information, how it's measured. I think the sustainability reporting standards will get to a place where there's measurement guidance and they know when they see a KPI what it means. And finally, but last but not least, is the relevance of the information. One of the things I hear, which will move me nicely into the frustrations, is that information about sustainability and ESG is very relevant to a business's performance and its ability to remain in business over time and in the long run. And they find it very frustrating that there's a lot of information that companies put in their annual reports or sustainability reports that has really nothing to do with the business or its operations or its prospects. And so bringing everything that's reported back to what's really relevant to the organization is really good. And I think it's sometimes hard for companies to do because it's safer to just talk about charitable organizations or things that they're doing in that vein. So that kind of brings me to the frustrations, which are the ones we probably already all know of. So reporting that's vague, so it's not clear what the company is saying. There's a lot of jargon. There's a lot of terms with sustainability that aren't, we aren't all experts in that. So the more companies can do to make that clearer. And also, I'll end on a point about balance. I think one of the things that investors really worry about is whether what's reported is really a true, balanced, neutral reflection of what's happening within the business. A lot of times companies try to paint a positive light. They do it with their accounting, they do it with their sustainability reporting, and there's a big concern in the investment community about corporate greenwashing. And our recent survey that we did, we just got the results back, 87% of investors globally, of the 227 that we surveyed, said that they think that there is some greenwashing going on. And of that about half of the respondents said they think it's quite prevalent, so a large, very large extent. So, and that's worrying. It's not good for corporate reputation. It's not good for the profession.
Thank you so much, and thank you for streamlining that hour-long frustration into a few minutes. So thanks so much, Hilary. So just a quick follow-up question on that. And you mentioned quite a few things, and I think importantly the balance, and so on. So what do you think the profession, right, everyone in this room, everyone on this stage, need to do to help address that frustration that you have described?
Yeah, I think one of the most important things is to really listen. I know investors are hard to get hold of. It's hard to get them to tell you their views. One of the reasons for that is because there's a lot of technical jargon and terminology that's used. So breaking those barriers down, I think, is really important. I guess that's a job for Tom to do. But there's not, they don't have a lot of understanding of audit. So they're relying heavily on the profession to act in their interest and to make sure that the reporting is, has all the characteristics that it needs to be high quality. But a lot of times the profession kind of hides behind the rules. So says, this is not what the standards say that we should do. This is not what we're meant to be doing, rather than thinking more proactively of, well, what could we do? How could we provide this information or make it more useful for the end reader of the accounts or the report? So I think a lot of it's about kind of dialogue and conversation to understand each other.
Right, and this is one of the dialogues that we're going to have, and we're having, to help support that. So thanks so much, Hilary, and Wally, can I just come to you next? Now, as we know, and Tom in his speech as well mentioned, that the IAASB is working at pace to deliver a new global standard, ISSA 5000, another acronym to remember. So the sustainability ESG specific dedicated standard is something we're working on, but assurance on certain sustainability information is not new, right? So you and your firm have been doing a lot of that already. So Hilary spoke about the investors' frustration. So what are some of the assurance challenges that assurance providers are facing today?
So thanks for that. Let me maybe put that into three categories to talk about. First is I'm going to call the market, and it's just this is going to take time. As we heard, there's a lot going on. It's not going to be perfect from the beginning, and I think that is what everybody needs to understand and have the dialogue. The dialogue that IAASB is having with IASB. IOSCO weighing in. I think ISBA and IOSCO is another important component as we work through this process to make sure everyone understands. Because we hear from investors a lot that they believe accounts today don't properly reflect the impacts, and they will say things of ESG, and they will say things like, you're the auditor, you should push clients to go beyond standards. Well, standards exist for consistency and comparability, and they're based on management's estimates and judgments. And if management has an estimate or a judgment that's in accordance with the standard, and the assurance provider says, no, that's not good enough, you need to go X beyond the standard, well, then it's no longer management's estimate and judgment, and they may not be the independent assurance provider anymore. And so it's opening that dialogue up and talking about it. But when it comes to the standards themselves, I mean, I think, we all know we've got 303410 in the EER guidance. And as Tom said, working very, very intently and focused on 5000. And that becomes really important, particularly in the S&G pillars, because having standards, corporate reporting standards, back to ISSB, that are robust and have a lot of information that are a good criteria, a framework against we can use the assurance standards to measure and report is critical. And having a single set of global standards that is adopted around the world. Now, granted, there can be local nuances where jurisdictions build on it because they need to, but that single set provides the foundation, the comparability that Hilary was just talking about. And so that becomes very important, and then obviously the assurance standards that weigh into that. And then I'll go on and add ISBA. When you look at Part 4B in the code today, which is the independent standards for assurance engagements, they're nowhere near as robust as what they are for financial statement audits and reviews. And so Gabrielle is well aware of that. That's part of the uplift she's trying to do. So then let's move to the auditors and the assurance providers. Well, what can we do in this time of flux, right? Well, one is training and guidance to our people, right? What is ESG about? We got to get comfortable with the basics on a lot of this stuff beforehand, making sure practitioners are understanding it. But then secondarily is clients. The clients really understand it. Has their management and their board really thought about it? When someone comes to you and says, I want you to give assurance on X, to Hilary's point, well, do they really have the controls and the systems in place to do that? And is it a holistic picture or is it just one data point that paints a very positive light? So as assurance providers, really understanding what your client wants, how they intend to use it, is it doable? Is there appropriate criteria to measure against? And is it a true and fair or materially correct view is an important component of that. So let me pause there.
Thank you so much, Wally. And obviously, the work with IAASB is just starting, and we will make sure that we are listening to all this conversation and all this frustration, challenges, and we are not promising that everything will be addressed and everything will be perfect, but definitely we will be taking those into consideration. And you talk a little bit about from the preparer side as well. So later on, we'll be very keen to pick that up and talk about what do preparers need to think about, right, on a going forward basis. So we'll come back to that. So thank you so much. And Tom, let me come to you. I think I've rested enough. So just coming back to the project. As a member of the board, I can absolutely attest to the pace and the dedication of the task force, of the whole board, and of the staff in driving this new sustainability specific assurance standard. Now, can you maybe just give us, and I'm sure everyone is just curious and interested, an overview of the main feature of this new standard that the board is working so hard right now to develop?
Yeah, so thank you, Chun Wee. So a few key features is the first thing, as David's research says, a lot of people are in the limited space. We need to cover both limited and reasonable assurance outcomes in the standard. We want the new standard to also be a complete assurance solution, like 3000 is, but with more specificity. We're also, as we call it, framework agnostic. So be it the IAASB, GRI standards, IFAC standards in Europe, or requirements set here in India, our assurance solution should be appropriate to do assurance engagements against all of them. And then, this is an important thing, that it is for the benefit of all users and stakeholders, investors as well as other stakeholders, which means that it will address the concept of double materiality that is so prominent in Europe and elsewhere. So how are we going to get this done? How do you get a standard done in 2 years? For standard setting, that's warp speed. And I think the first thing is to realize that ISA 3000, 3410, and our EAR guidance provides a pretty good foundation. It just isn't specific enough for sustainability. So we're not taking on a greenfield approach. We're not trying to start from scratch. We're taking those concepts and going deeper in a few key areas. So related to the work effort on how you go do limited or reasonable assurance engagements. That's particularly necessary because in many jurisdictions, they're using limited as like a gateway entry point for the requirements, and then move it to reasonable in a few years. Wally talked about this point. What's the suitable criteria for assurance? When can you actually perform an effective engagement? What are the scopes of the engagement? How do you assess internal controls? How do you deal with materiality? And what is sufficient, appropriate evidence in the context of the assurance? So those are 6 areas that will go much more detailed than we were in ISA 3000. Again, this is just a starting point. I expect a full 5000 series to evolve, not dissimilar to what you see on ISAs. And then ultimately over time, one consideration we'll have to think about
is a world in which you have a more integrated mindset, where financial and non-financial emergent. How do we make sure that we're not running on two separate paths, but on a path that could be integrated over time?
Wonderful. Thank you so much, Tom. And I can see Wally's really excited about what Tom has said.
At least someone is.
Do you have any comments on that?
Well, no, I think, just to echo what Tom's saying with an example, I mean, in ISAs, you got 1,000 pages of guidance and standards versus ISA 3000, you got 60 pages, right? And so all those things, how do you assess materiality, double, risk assessment, all those things become really critical, and there's a good foundation to move over and pull this in. But again, it's going to take time, and it's going to continue to evolve, because when you start to get into S and G pillars, what's the benchmark or criteria you use to measure against that? You don't have the things that you have for greenhouse gases today.
Absolutely, and thank you so much. So Naweed, I still remember you, and I'll come to you next, but I realize that it's not shown on the screen right now, so could we make sure that Naweed is back on the screen? And I'm going to come to him immediately after the next question. So Wally, since you have the mic, I'm just going to come back to you, and just maybe it's a two-in-one question that I have for you right now. So one of the points that David mentioned about the IFAC's vision about the high quality assurance of sustainability information is the importance of regulation, right? So be keen to pick your brain on regulation, what you think of that. And the other piece is 3000, as we know, is profession agnostic. And also, the new ESG specific standard will also be industry agnostic. So not just professional accountants, but anyone can actually pick it up and apply it. So IOSCO, also from a securities regulator's perspective, has publicly supported this approach. So my question to you, Wally, is, first of all, what is your view on the role of regulation? And then, of course, after that, I'm going to get Naweed to come back. So he's going to listen very carefully to what you say. And also the role of non-professional accountants who are clearly part of this disclosure and assurance ecosystem. So what do you think of that?
So a couple of things. So I think one of the things we've got to reframe and think about as the ecosystem as a whole is that now we're going to have levels of non-financial information that are presented on par at the same level, same corporate reporting ecosystem as financial information. And investors are automatically going to assume that the rigor behind that, the level of independence, the quality control systems that exist within the providers of that assurance are the same. And that's one of the things where IOSCO has a huge role through all of its members in messaging to the market, because while Tom can write standards that are profession agnostic, he can't force non-practitioners to use them. The same thing for Gabriella. So that will come to the market regulators that force that and force those standards to be used by whoever provides it, because it has to be a level playing field. If you take, just as an example, 3000 today says if you're going to do it, you have to follow IAASB or an equally robust framework. You have to have an ISQC1 system or an equally robust framework. I don't quite know what that means. And, we start to see opinions that are out there today provided by IT consultancies that say our work was based on ISA 3000. It was done with reference to ISA 3000. I don't know, but my guess is they don't have independent systems that they're going through and checking those types of things. And I don't know what the quality control systems look like. But so whoever provides it needs to be providing it under the same framework. And as statutory auditors and accountants, obviously we've got licensure, education, we've got our own internal inspection and quality controls, we've got regulatory oversight, you've got the investigation, inspection, enforcement mechanisms that exist out there today, and largely drove some of the decisions in Europe around whether the statutory auditor could or could not do that. So from my view, the regulatory role, the role of regulators, is the only way to ensure that consistency, but it's by them adopting it as market regulators, as capital markets overseers versus the boards and what they have to do.
Fantastic. Yes,
Can I
please.
add
Yes,
to that?
please.
'Cause one of the things that I think what Wally said really resonated, because I think one of the differences with sustainability assurance versus financial reporting assurance, and if they're all going to be in the same place, I know for financial reporting, investors value a larger firm doing it. They know they don't know in detail what the assurance or the audit standards say, but they do know that generally how it's been carried out and a standard and robustness that goes along with that financial statement audit. So they don't know the difference, though, between what Wally's describing with the consultancy firms providing assurance that's based on an assurance standard. They're not going to know what that means. So I think there's a really big, even public interest issue coming here. But in our survey, one thing that we found too is that the investors don't particularly care who's providing the assurance, but they do expect them to be experts in the subject matter, to apply professional skepticism, to be subject to regulation and ethical standards, independence requirements. So that all the things that the audited, or the regulated audit profession are subject to, they expect that, but I don't think that they're aware that not all assurance providers or people who are saying that they're providing assurance are actually providing the assurance that they think. So I think that's something the profession needs to, and the regulators need to really think about.
Thank you. Thanks so much for the intervention. And just very, very clearly, the expectation is that it's of the same high, robust level.
Exactly.
Right? Is it actually the same high, robust level? And I think while you're mentioning that the regulator actually have a very important role to play to that. And I could see that when you were making your comments, Naweed was on screen and he was nodding. I'm not sure whether he was just acknowledging or whether he's agreeing, but I can't see him on screen right now. Is Naweed still here? Okay. Naweed, can I come to you? Obviously, have not forgotten about your very important voice. So IOSCO, as we know, has been very vocal and supportive of the efforts of IAASB, right, to develop the global baseline of investors-focused disclosure requirements. And it has also released a statement supporting the work of both the IAASB and the IASB, the Ethics Board. And we have all heard, of course, yesterday, the comments by the Secretary General. So we'd be really keen to know, from your perspective, in addition to IOSCO global leadership, which is obviously really, really important, what are the issues that local regulators will need to address in order for our work on ISS A5000 to be a success in practice? Naweed, over to you.
All right, thank you. I think that first, thanks for having me here, and good evening, Mumbai. It's unfortunate that I'm not physically there. But before I start, I must say that the views are my personal views and not that of the DFSO or any global organization, which I will mention in my remarks. I will answer your question, and I also have a comment for Wally's response as well. See, I think the tone at the top matters a lot. The global bodies have a role to play, but the country legislative authorities have a clearer mandate to do things. So, for example, in the UAE, these topics started emerging in 2019. And since then, the UAE the government formed a sustainable finance working group to start addressing these issues. In 2020, the working group published its guiding principles on sustainable finance and encouraging regulated entities. And the working group has central bank, the securities regulator, ourselves, all regulators which really matter in the UAE to encourage their own regulated entities to start integrating ESG factors on firms' risk management and governance. In 2021, the working group also published a clear ESG governance roadmap as well. So I think the tone at the top really matters, but the key is, so let's go out of the country and go to the international regulatory landscape. The global bodies likes of IOSCO, IAIS on the insurance side, Basel Committee on the banking side, has to mandate, not consider, but has to mandate these standards for its member bodies. So IOSCO's statement on COP27 earlier this month, they're saying they are considering. They have not adopted yet. The Secretary General remarks were very encouraging yesterday, but these standards has to flow into the core principles of IOSCO, and that will make a way for all the national standard setters to comply with it. Because if they don't comply with the core principles, they get a bad FSAP ranking. And the foreign direct investment is directly impacted by those assessments. So I think IOSCO on target, and as soon as the global bodies adopt these type of standards, the local legislative authorities will have to embed them into the regulatory framework. Not only they have to push that and codify them into the framework, they'll have to give a smooth transit plan for the entire ecosystem. So we are talking about the preparers, we're talking about the assurance service provider, and personally, I believe that that would be accountants as well as the non-accountants. David, your research was the numbers were speaking loud. 61% was done generally by the accountants. But I think in the UAE, the big four or the global networks are pushing the agenda forward. They are the driving force behind the professionals leading the way on the ESG side. Having said that, I think the implementation challenges are even harder. Resource constraints. You may have the best of the framework, but are there any sufficient qualified resources available? The professional accounting firms have already put their hands up on whatever was available in the market. The regulators are lagging behind, trying to hire the right people on the market there. The preparation side also has a challenge there. They will go back to the professional accounting firms to help them give the disclosures, to help them bring the right elements. We have been talking about the assurance work, but I don't think so that the assurance will come handy in the next immediate term, in next 1 to 2 years. So if you look at the example of New Zealand, when it's also mentioned in the IFAC study paper, they are mandating the assurance work, expected to mandate from 2027. They will bring the disclosures from 2024, but doesn't expect that the assurance work would carry out from 2027. So I think there is still time, and that's where the work which Tom and his team are doing, although at a very fast pace, 2024 looks to be a very good time for the standards to be in place, and slowly, bit by bit, those standards needs to be implemented and provided a level playing field for everyone, whether accountants or non-accountants. I'll stop here. If you allow me to answer, to just give a comment on what Wally mentioned that. And it appears, Wally, you are the reason I'm online, because we can't seem to be in the same room. Last time you were on screen and I was in the room. So Wally, I think this is the regulator in me speaking, that, you know, we talk about the financial statement audit, and now we compare the assurance work with the financial statement audit as well. But we still can't get the financial statement audit right on major listed entities. IFIAR last inspection finding results suggest over 1/3 of the listed audits still have deficiencies there. So I think we need to get our house in order as well before we started expanding the reach to the other areas where certainly the expertise are lacking. So we have a chance here, as Tom mentioned at the start, but we do not want this to be a lost opportunity. I'll stop here.
Thank you so much, Naweed. Thank you for giving us a glimpse into the regulatory thinking. Wally, I don't know whether you want to respond to what Naweed has said or no.
No, it's a very valid point, and one you mentioned. Let me go back to resources first, because I think that is a critical thing, and then we come to the other. There is a talent shortage out there for these specializations. The firms need them, the entities, the issuers need them, the regulators need them, the investor groups want them to be able to analyze this information. And actually, this is a key area where the PAOs can step in and help by developing guidance and education and help bringing that along. A lot of the firms are doing it themselves, but the more we can do, the PAOs working with universities to get this built into the curriculum. It also ties in, I mean, you can pull the state of play, you can pull the stuff that IFAC's done before on you know, building a better profession, getting people engaged in it. So there is a huge opportunity to bring that back. So moving to the point that Naweed was making, it is true, you know, I mean, the last CPR survey, the midterm, I can't remember, was 29-30%, something in that range of the inspections that had at least one deficiency in it. And I think actually as corporate reporting evolves over time, we're going to see it side by side. Certainly when you look at proposals like the SEC has out, it is clear that that information will be disclosed in a footnote, will be subject to the internal control opinion. Then you'll have a separate section called corporate disclosure and analysis. So from an SEC mandate, the way they look at it, that information is filed with the commission. So it's under the commission's purview, which means theoretically it will be under the PCAOB's audit, inspection, and enforcement authority. And I think you have to look at what, I think most regulators around the world will have that authority over it as well. Some may have legislative changes that they have to bring into place to do that. But I think it's gonna be there, and taking the time to get it right, Naweed, is exactly what we need to do.
Thank you so much. So time is really running out. I mean, time's really flies when you're on the stage somehow. So I just need to ask a few absolutely must-ask questions on my list. So maybe, we saw from David's presentation, and he mentioned a few countries where there are more non-professional accountants than accountants who are providing services, and I think that includes India. So maybe just a question for you, Wally, and maybe to the practitioners in the room. In the jurisdiction where profession is not currently providing much of assurance work on sustainability information, how does or should the profession sort of recalibrate to provide more of this service?
So I think a lot of it actually kind of comes back to what we were talking about a little earlier, which is, making sure that the investors, that the regulators, that the legislators understand the framework that's in place around the licensure qualification of the professional accountant, and then how this information is going to be used and put on parallel or side by side with financial information, to the point Hilary was making that investors wanted. So, the institutes, the firms stepping in and doing that, having that dialogue with legislators, with regulators, before we get to the point that assurance is required, because then we're trying to unwind something. So, when you think about the dialogue that happened in Europe, one of the reasons they pushed for the statutory auditor to do it is because they didn't want to create a new regulator and build that whole qualification system again. So that's important. It's also talking about the importance of what we do to the market. We're used to this. We understand systems, companies, controls, processes. We help companies that we don't audit build those things in their ethos, if you will, every day. And so it's just taking advantage of that, bringing that to the market and dialoguing about it.
Right. Oh, that's really helpful to hear. So, I want to talk about something which I've been hearing, right? Which is that this is a sort of a transition period. It'll take a while for the whole ecosystem to mature, infrastructure, and so on. And one of the key messages we've been hearing from all this different conversation is that preparers will not get it perfect from day one, right? So, and that's, in terms of processes, system, data collection, and so on. So Hilary, maybe I come to you first. How much information do we think investors are expecting from the assurance report, right, in communicating to, themselves and other users? Because, I don't know whether a pass or fail is sufficient anymore.
Yeah.
So.
Yeah, I think, well, you started mentioning corporate reporting evolving over time, and I think investors appreciate that, well, it has been evolving over time, and so they know that that will continue, and they know that there will be a settling in period while companies try to understand how to gather the data, get the systems in place, make sure there's the right oversight controls and everything, and then the assurance practitioner will come on top of that and make sure it's all done properly. So I think they recognize that there is going to be a transition period, and it will evolve, and quality will improve, and more information will come forward over time, and that's fine. Not forever, but I think there will be a few reporting cycles, I think, where they try to learn themselves and also give companies an opportunity to explain it to them and get up to speed. In terms of the assurance reports, it's a good question, because I know that we have an extended audit report now for financial statements. I have heard a number of investors saying they want the same thing for sustainability reporting or for sustainability assurance. And actually to one thing Tom mentioned about the new standards coming is that it will cover reasonable assurance as well as limited assurance. And investors also want, in our survey, want reasonable assurance. In fact, only about half said that they were satisfied with limited assurance for giving them confidence, which is quite alarming given that that's what they're getting now. So if they want more than that, I think this is a call to arms for the profession to get up to speed with being able to do that. And I know there are a number of challenges, but I think we'll get there. But definitely investors would like to know the same kinds of things that they know for the financial statements. What kept the auditor up at night? What were the things that were most challenging, that had the most subjectivity that they really had to dig into and get comfortable with? How did they, what did they think about it and report that information in, the same kind of level of detail they're doing in the financial statement audit report?
I wonder if any other panelists have a view on this question. Do you want to chime in on that?
Well,
Yeah.
Joey, you know that we haven't decided exactly where we're going to land on assurance reporting here. But, things that I hear is how does an auditor in an imperfect world, or an assurance provider in an imperfect world, which we acknowledge, share how they are trying to grapple with some of these issues. And also remember, the way the ESG information, or sustainability information is being presented, it's being presented in lots of different formats, and that has not been resolved. So our attitude at our board has been to be very cautious in this area because we want to see an evolution occur. We don't want to stymie the evolution on the reported side. But I do think we have to figure out a way, when we take on this issue of reporting from an assurance practitioner standpoint, to do it in a way that's much more nuanced to reflect the immaturity in the spectrum. So this is an issue, we may not talk about it at a December board meeting, but it is inevitable before we go out to exposure draft next year.
Yeah. I'm looking forward to the very interesting conversation around this topic, Tom. Yes, Wally.
This is actually, I think, one of the very critical areas, which is what is the report going to look like and what is it going to have in it? And so the work Tom's talking about, and I know we can't see Naweed now, but frankly, the input of the regulatory community on what they expect for consistency, and to enable, you mentioned it in your opening remarks, Hilary, but the investors can't do that today because of all those different standards and different levels of disclosure. That's going to be really, really critical, is having whatever's coming out of the report, but then what the regulators think needs to be there for their specific markets.
Well, I think we've really run out of time, so we need to give everyone an opportunity to give your last word. But Tom, I'm going to start with you, just in terms of what is the next step for the board? And also, what are the milestones once the standard is finalized? So we'll start with you.
Well, the next step is we have a board meeting in December, and hopefully people like you will cooperate with us throughout, because we need to get an exposure draft out by September of next year, and we hope to approve an exposure draft by September of next year. The comment period will run into early 2024, so we need everyone in the audience and everyone listed to participate. And then we need to finish this. And I know our project proposal says that we could finish it either in Q4 2024 or early 2025. But I'm going to push us to finish this in 2024 because we need that ecosystem to work in tandem. We need to be conscious that Europe and other jurisdictions are requiring standards to be in place. And it's no good to have a global standard if it's not going to be adopted. So we're going to move quickly, we're going to get it done, and we're going to certainly operate, like I said yesterday, in getting the minimum viable product out to the market.
Thank you for that vision. And I have not downloaded the board papers yet. I understand there are more than 200 pages just on sustainability assurance. I'm looking forward to reading that. So I'm going to give the rest of the panelists the chance to give your last word to our audience. What is the key takeaway for them? And can we please have Naweed back on the screen again? I mean, he's disappeared again. But can we start with you? David, you've been waiting very patiently.
the voice of the fifth and silent panelist over here. So I'd like to give everyone in the audience to think about having confidence in what we bring as a profession. IFAC put out a call to action at the beginning of this year, and one of the most important things we said in there was that we have to advocate for ourselves, and we have to take confidence in the skills and competencies that we have. As Hilary said, investors want what the profession delivers. We may need to acquire specific knowledge with respect to sustainability, but the skills and competencies that underlie us as professional accountants is what investors rely on and are expecting from us and what we can deliver. So as the IAASB comes into being, as it develops more and more standards, I hope that reporting becomes more robust. Right? We need the reporting to address risks and opportunities, the reporting to address business strategy and business plans, how it impacts performance, and yes, some KPIs. But we need, as we get away from reporting a bunch of numbers and having a broader scope of reporting, I think that's where the profession, particularly in those jurisdictions where consultants have the stronghold, can really make a difference in the future of reporting and assurance.
Thank you so much, David. It's worth the wait. Naweed, can we come to you next?
Sure, depending on whether you can see or not, but certainly I'm sure you can hear. I think the key is to have a clearer mandate, and that's what I think the next couple of months, maybe a year or so, regulators will have a mandate, and it will identify who is doing the job, whether it's the current regulators or there will be a new set of bodies like Japan has opted, moving out to a new set of sustainability regulator. Besides clearer mandate, I think we need to work on bridging the gap. Expectations gap, education gap, and the resources gap. These are three gaps which will be crucial for the sustainability related work. At the end, we need to remember that Rome wasn't built in a day, and that won't happen with the sustainability as well. We have to take small baby steps to make it more sustainable for us to survive.
Thank you so much. Well-defined three gaps, so we'll look forward to breaching them. So Hilary, can we come to you next?
Yeah, I think from an investor perspective, I guess the biggest thing for them right now is getting the reporting right and having consistent, high-quality reporting standards, companies applying those. There will be jurisdictional overlays, and they understand that, and of course, there could be differences, but that high-quality, kind of reliable reporting is what's really important. And one thing that, this may or may not be helpful, but one thing I've observed with investors is they focus on the things that they need to focus on, the things that they're worried about that's right in front of them. So actually, if they're not engaging on audit or assurance, it means actually that things are fine, because right now we're in a very severe economic environment. We've got a lot of things going on, high inflation. The way they're managing investments won't always allow them to take the time to think about something that they think is working fine. So sometimes I have to tell my colleagues, if they're not engaging on this topic and they're not bothering you about it, that's actually a good sign. And it's also a really good sign when they do bother you about it and they do want to engage, because it shows the importance of audit and assurance to their work and their ability to do their job. So I'd say this is a really important time. It will be important to engage, but I think it's going to take some time, and that collaboration, communication, dialogue, no jargon and stuff will help that.
Thank you so much. Wonderful. Wally, last word.
I think it's all important. I think Naweed, Tom, and Hilary said it well. The other thing I would say is, like I said, making sure you're getting your practitioners understanding what it is, what it's going to look like, how it's evolving. But one of the other critical things is, are the clients, are the entities that we're going to give this assurance on ready? Do they know where this data resides in their entity? Can they have identified it? Do they know what's important to their stakeholders and thought about materiality, because you can't do it all? And are they developing and building the right systems, processes, and controls to identify, assimilate, measure, and report this information in a consistent manner? Because right now it sits outside of the controllership group in most companies, and it's other reporting, but when it comes in and has to be in the same time frame as financials, it changes the dynamic pretty drastically. And so companies have to be ready for that. Even if Tom has the standards ready, if the companies aren't ready, it doesn't matter.
Thank you so much. I constantly think of the quote that I saw back in 2013. It was an article published by Harvard Business Review, and the title was "Accountants Will Save the World." Right? At that time, I think when it was published, it raised a few eyebrows, but I'm sure at this point in time, and especially in recent time, this has really ring true for all of us. And I think this is an absolute opportunity for the profession, and this is the key theme for any accounting gathering that we've seen. So thank you so much, everyone, and it just leaves for me to ask everyone to thank my esteemed panel for all the insights and generous sharing. Thank you, and I'll hand it back to the MC. Thank you.
Thank you so much, distinguished dignitaries here on the dais. And thank you so much to the moderator, Mr. Chun Wee Chiew. A big thank you to you for beautifully moderating the entire panel discussion here. And a big thank you to all the other panel members here as well. We had a great session, a deep understanding on enhancing trust and confidence in sustainability information. Let's have a big round of applause, everyone. And now to present the mementos and felicitate our speakers here, I'd like to call on stage CA Purushottam Khandelwal, Central Council member, to come on the dais, please, and help us in presenting a memento to Mr. Chun Wee Chiew. Let's have a big round of applause, everyone. May I now invite CA Gyan Chandra Mishra, Central Council member, up here on the dais to present a memento to Mr. David Madon. Let's have a round of applause, please. Now, may I request respected CA Murtaza Kachwala, Chairman WIRC, to kindly come up here on the dais to present a memento to Mr. Tom Seidenstein. Let's have a round of applause, everyone. Thank you so much, sir, for doing the honors. And now I would like to invite CA Ravi Patwa, Chairman EIRC, up here on the dais. And I may request you to kindly present a memento to Mr. Wallace D. Gregory. Let's have a big round of applause, please. Thank you so much, sir, for doing us the honor. And now I would like to invite CA Atul Mehrotra ji, Chairman CIRC, to kindly come up here on the dais to present a memento to Ms. Hilary Eastman. Let's put our hands together and give them a round of applause, please. We'll have a group picture now. Would request all the dignitaries to kindly come together. And for that moment, let's have a big round of applause for all the distinguished dignitaries here on the dais. Thank you so much. It was indeed a pleasure. And I'd like to make an announcement at this stage that we have all the concurrent sessions going on. We have the next one coming up here at the Jasmine Hall itself in just about in a couple of minutes. And we also have the concurrent session going on at the ICAI auditorium on the theme of professional and investment opportunities in America and Europe. So interested delegates may kindly attend the same. And for the next session on understanding capital markets, we're going to be starting off in the next few minutes. Kindly remain seated.